Daniel in Texas says, I'm 23 and about to move into my first apartment.
Congratulations to you.
He says, I'm a late bloomer. After living at home for so long, I know how to save more and spend less. You'll probably tell me to stay home, but I think it's time for me to spread my wings and be free. Aside from finding the best phone and internet plans, which I'll be using your site for, what are some tips you have when it comes to things like renter's insurance, utility bills, extreme couponing, and avoiding apartment scams? Some tough love here is okay, since I tend to be a little loose on my spending and hard-headed. Thanks for everything you do, and I promise to put some money into that Roth IRA that I opened up 2 months ago.
All right, Daniel, so tough love, we're going to start in reverse order. You said to me you're saving more, spending less, but at the same time, you tend to spend a little money. You opened up the Roth, fantastic. Here's what I want you to do, not some money. I want you to come up with a set amount of money you put in that Roth every month. So it becomes a regular habit and your good intentions don't go by the wayside that you're doing that. Okay, and I love the questions you're asking. You want renter's insurance. Typically, whoever you have car insurance from will also sell renter's insurance. And I like a policy bought from an insurer you already know or you use in your family, rather than buying whatever policy the apartment complex may try to sell you that won't be as good and will be more expensive. Utility bills, and this is something you don't have enough control over when you're in an apartment, because the apartment may be well built, may not be, and so the apartment's not going to have an automatic thermostat, like a Nest or one of their competitors. So you're going to manually have to do a note by the door that you always remember when you leave to go to work, that you adjust the thermostat manually to reduce those utility bills. I mean, you do those basic things, you'll be fine. Apartment scams, there aren't that many apartment scams. There are a lot of home rental scams where someone pretends that they have an apartment for rent and they scam you out of money. Yeah. That's not likely to happen with an apartment community. The great news with apartment communities, you can shop them, come up with a list of ones you're interested in, shop what they're offering online as specials, and then go see them, and then you put them in competition with each other. And that's how you'll be able to save money on that apartment every single month.
Cheryl in Oregon says, my husband has communicated to me that per a Clark Howard podcast, I should remove my Fidelity app from my phone. I understand there is a risk that if I'm active with my phone open, I could be prone to a run and grab, which would expose access to my apps to a theft. However, I have money transfer lockdown on my Fidelity accounts. I like my Fidelity app. It uses face recognition, and when I log in online, on a computer, it uses my app to prove computer access. Does Clark really want me to remove my app from my phone?
You don't have to, Cheryl, because you've taken the right precautions. The important thing from that podcast is to be aware of the danger about why criminals are stealing phones now. They are not doing a grab and run or whatever they go, smash and grab, whatever they call it. They're not doing that to have your phone. Nobody cares about the phone anymore. It's all about what the phone opens up with access to the money you have in your life. And the funny thing is, as an Android user, not an iPhone user, the criminals target people with iPhones because the assumption is people with iPhones have money, people with Androids don't. So just know that you got a bullseye target on you if you have the latest, greatest iPhone. But if you've taken all the precautions you have with Fidelity, including locking down transfers, then you can breathe easy and you should be okay.
Alex in California says, I received a letter from my state controller notifying me of some unclaimed money from a class action lawsuit regarding a previous employer. The letter looks legitimate and even provides a .gov site for me to look up and verify the amount, in this case around $150. My only concern is I need to provide them my social security number. Is this a normal procedure for them to do? For $150, I'm not sure if that's enough to risk my social security number falling into the wrong hands.
Alex, it is. So, okay, you know that you fill out the paperwork, you're going to get $150. And then there's the remote chance that someone will take that Social Security information and do harm to you. Hopefully you already have your credit frozen because your Social Security number in data breaches has already been leaked again and again and again. So that's why credit freeze is so important. But I'd feel comfortable doing it. And you were lucky that you were informed by the controller of the state of California this money was there for you. Most of us aren't going to have our state reaching out to us and say, hey, we got some money for you. So know about unclaimed.org, which is a clearinghouse site that's legit, that tells you in most states money that may be hanging out there for you or a loved one that you didn't know about.
Okay, this one's from Christopher in Oregon. I have been a loyal Costco traveler for many years using the Costco Visa card and travel website. They seem to add value to trips and the packaging is nice. However, in 2025, my wife and I will be celebrating our 25th anniversary and would like to take a special vacation this summer. We are considering getting the Chase Sapphire Reserve card. With the points bonus and upgrades like lounges, we thought it might be worth a try basically for one big trip. I know the fees are high, but we should get our money's worth and could cancel the card. Our credit score is in the 800s and we have no debt except our mortgage. We don't anticipate any other debt or major purchases, so the hit of canceling the card would be okay. What are your thoughts?
I think it's great, Christopher, and compare the benefits of the three bigs of the independent travel cards. In your circumstance, and congratulations on your 25th wedding anniversary.
Congrats.
There's a big splurge, doing a big trip, and getting either the Sapphire Reserve, the Capital One Venture X, or the American Express Platinum, all with their huge fees. You get such great sign-up bonuses. And so the first year is kind of a no-brainer. And then the benefits you get, it could really pay off for you on this very special vacation you're taking. And no harm, no foul. This is a great thing, but compare all three to see which one's best. The Chase is $395 annual. The Capital One is $395. The Chase, as I recall, is $550, and the American Express is $700 annual fee. Each have their own separate benefit packages. See which one looks like it has the best return for your money. Now, I want to say something about the Costco thing. If you're booking something with Costco Travel, there is a problem with the Costco Visa now that didn't used to exist. Citi ripped away from Costco members the trip cancellation, trip interruption coverage that came with using the card to book travel. And now it makes sense to have another card that does come with rock solid trip insurance coverage, although any trip insurance policy, the insurer seems to try to find a way not to want to pay. But the Sapphire Reserve, one of the benefits people don't recognize with that card that's great is the trip coverage you have with it and the car rental coverage you have with it that makes it, for a regular traveler, potentially a really good card to carry.
Jim in Missouri says, when shopping for homeowners and auto insurance, would I need to unfreeze my credit first? I thought you mentioned that many insurance companies would base a quote on credit score, but so far no companies have said anything about credit score when I've applied. I have a very good score and want to make sure I'm going to get the best price quotes.
So in almost every state now, the number one criteria for setting your auto insurance premiums and potentially homeowners is your credit score. Well, it's not a traditional credit score. It's your credit report that then has an industry formula. So it's insurers in most states are allowed what's known as a soft hit, where even if your credit's frozen, they can get a sense of what's going on with your credit. But my recommendation is to do your shopping for homeowners or auto insurance in a concentrated period and thaw your 3 credit files for, let's say, 72 hours or something like that, so that you don't have to worry that you're paying discriminatory rates for your auto or homeowners insurance because your credit is frozen. And so the temporary thaw is free. It's easy to do. However, if you are turned down for an auto insurance policy or homeowner insurance policy, or they charged you higher rates because they didn't have access to your credit report, the insurer is supposed to disclose that to you. I say supposed to. And we do have a briefing on this. We actually have an article titled, "Do I Need to Unfreeze My Credit to Shop for Car Insurance?" on Clark.com. But just take it from me that in the states that allow, and you can look online to easily find what states allow insurers to set your rates for auto and homeowners based on your credit score or credit report. Set down a time, couple of days, you're going to shop auto or homeowners or both, and thaw your credit for those days. Let them run that on you, and then you'll be fine. It goes back frozen after those couple of days, and you'll get the preferential rates that people may get based on their credit standing.
Tara in Georgia says, "Help Clark, my sweet 78-year-old mother has fallen in love with an online scammer and has already lost $60,000 of her money by sending/wiring it to him. It was all of her savings plus new credit card debt. Because she willingly sent him money or huge gift card amounts when he requested them, the police said they cannot take any action. She has taken a line of credit against her home to pay off the credit card debt. My family has tried relentlessly to convince her that he's a scammer, but she doesn't believe us. We consulted a lawyer and got a joint trust to protect her home, the only thing she has left, but we're worried he could illegally take it from her because she's given him all of her personal information. We don't know how to help her any further. We're at our wits' end. It's really a nightmare."
This is happening way too much. This is what's known as a pig butchering scam, and the whole thing with the romance, looking for people that are older and lonely. It doesn't have to be older, but so often that's where it is. I'm really, really sorry, Tara. Now, you went to a lawyer, but likely you didn't go to the right kind of lawyer to look at the overall picture for your mom. There is a rare kind of lawyer that specializes in what's known as elder law. There's even an association for elder law attorneys that you can see a list available.
We'll put that in the show notes.
We'll put that link in the show notes for you.
The episode description.
Thank you.
Sorry.
So Tara, if you have siblings, you need to get in for a consult immediately with an elder law attorney to see what steps you need to put in place to provide full, complete protection for your mom. A general practice attorney could be well-meaning and felt that this trust they designed was the best protection they could come up with. But an elder law attorney will deal wider with all the issues with your mom and will ask you, and if you have siblings, painful questions about your mom's current mental capacity and all that. So you need to do this quickly. Elder law attorneys are kind of in the high middle of cost per hour because it is a specialization, but the stakes of the game make it worth it. And I hope to hear back from you how things settle out for your mom. And I wish the best for you and for her.
Yes, what is truly a nightmare. Chip in Massachusetts question. He says, "I'm considering booking a family trip in May on Breeze Airways as the value for the price paid looks excellent. My concern is around the viability of some of these newer airlines, especially since my trip is more than 5 months away," when he wrote this to us. "Do you think it is reasonably safe to book with Breeze at this time?"
This is a great question. So Breeze was started and is owned, mostly it's a privately held airline, by David Neeleman, who's the guy who founded JetBlue, Azul in Brazil, saved TAP Airlines in Portugal, was involved in starting WestJet in Canada, and now Breeze. Breeze is a whole new concept from others he's done in that it's a discount airline that uses brand new state-of-the-art aircraft, one of the most comfortable aircraft you can fly in the world, the A220. A lot of airline industry analysts are like, how are they ever going to make money selling bargain tickets, flying a state-of-the-art, expensive new aircraft? And so far, they have to do filings, even though it's privately held, with the US DOT. Breeze has lost a lot of money over its first 3 years. It is a very, from what I hear and what I read, a very well-run airline, but very much a contrast to the other airline that started at the same time. You talk about newer airlines, Avelo, which is doing extremely well, also privately owned. And Avelo and Breeze both use the same kind of business model, flying just most routes a couple of times, 3 times a week, and flying to a lot of leisure destinations that the full-fare airlines don't fly on. Avelo, by buying and using used airplanes, has made it to being profitable pretty quickly and runs, by looking at DOT stats, a very reliable operation. So going back to your original question about buying a ticket on Breeze, so if you pay with a credit card, that normally gives you complete blanket protection for the first 2 months from when you purchase, but you're 5 months out. Historically, credit card companies have refunded money in the case of an airline failure, even if it is many months later. Now, David Neeleman is very wealthy himself, is estimated to be worth, depending on who you believe, somewhere close to $500 million. This is a vanity project for him, a new idea, new startup. And he's got a lot of wealthy friends that have put money into it. So anybody could go out of business. Any company could. But as far as Breeze failing sometime in 25, or even failing for that matter, there's nothing that says that anything like that is going on.
All right, this came in from Kip in Utah. I want to invest my tax withholdings and earn interest on that money. My plan is to not have my employer withhold funds next year and put that money into a separate high-yield savings account. At the end of the year, I would pay my taxes from that account. Is that a good idea, or am I missing something?
You're missing something. The IRS is all over this because, Kip, they will charge you underpayment penalties, and you will pay, let's say you're earning 5% in a high-yield savings account. That's about what the best ones are doing, somewhere right around 5. You'll be paying the IRS over 8% interest on all your tax bill due for underpayment of withholding through the year. In your case, non-payment of the holding, or underpayment of income tax. So they have this all figured out, and it's not the IRS that did that. Congress did, and there's a formula. So it's not going to work. Have your employer withhold taxes, and no, there's no free lunch here.
Richard in Delaware says, hello, Clark. I love your show. I wanted to ask where I could stash new home savings. I've been saving for a while now, and I was wondering, should I invest it, put it in a CD, and or save in a high-yield savings account? I hope to buy a home in 3 years. And we get a lot of people asking these questions.
We do get this
holding
question.
Money.
We get this question far more than we ever have because, well, we went through the years you didn't earn any money on savings. Now the disparity where you've got the giant monster mega banks still paying as little as 1/100th of 1%. Then you have online banks paying as much as over 5%. It's a much more relevant thing. And friends don't let friends put money in a savings account at Bank of America, Chase, Citibank, or Wells Fargo. And if you're doing it, it only means you need to stop hating on yourself and move your money. Okay, in your case, you can't be an investor. 3-year window, you are a saver. You don't know exactly when in that 3-year window you might buy a home. So I would say, even though the interest rate can change daily, I would put the money in an online savings account. And putting it in an online savings account is going to earn you, if you look at, we've got a list, there are several lists out there, you're going to earn roughly 5% on the money. The other thing is, if you have an account with one of my favorite children, Vanguard, Schwab, or Fidelity, you can go into money market accounts with them, money funds, that will pay you a similar kind of rate just right from your existing brokerage account. CDs, what's going to happen with CD rates is really up in the air because financial markets are really worried about us having expanded deficits coming up at the federal level, which will lead to potentially higher interest rates. So the shift in the psychology of the market means that right now it's a better idea to just be a flat-out saver in online savings accounts or in these brokerage money market accounts with one of the discount brokers instead of doing CDs. And absolutely, with a 3-year window, no way do I want you putting that money in the stock market.
Fred in Georgia says, I subleased a car to another person. The loan and insurance is in my name. This person has not sent a payment to me in 6 months, left the state, and moved to another state. I do have her address, but she blocked all contact from me, and I would like to have the car repossessed. What snowball effect on my current active credit cards will a repossession be?
Okay, truthfully, I'm shallow breathing right now, Fred, because this is like the worst possible circumstance with a car. We used to get what was called the vehicle subleasing scam repeatedly on the show. Yours is the first we've had in
years and years.
Years and years. So you're in a contract with a lender. It is against the contract. It's basically a violation of the contract, and potentially, depending on the state, a violation of the law, that you took your vehicle and subleased it. I don't know if it was an informal thing where you thought you were entering into a sublease with someone, or one of those scam companies convinced you could sublease to this other person. I don't know if this was somebody who was a friend or whatever.
It sounds that way to me because she lived in the same state and then moved to a neighboring state.
So you don't want to have the vehicle repossessed because if you do, the financial consequences stay with you 7 years. You'll be sued for the loss, and you will be required to make the payments anyway on this vehicle. And you're paying for the lease. You're paying for the insurance. This is a disaster. And I want you to go meet with a collection attorney and find out what rights you have in the state you live in the state where this car now is, to do a repossession where you take possession of the vehicle back, not a repossession where the lender comes and gets it, the leasing company. Because let me tell you, that is every possible way bad. And you may have rights, depending on the law in the state, to repossess the vehicle for non-payment from this individual you sublet to. I want to hear from you later, but please seek out a lawyer who specializes in collections right away. Time is not your friend here.
This might be crazy, but I wonder if the police would consider it stolen at this point.
They look at it as a civil matter.
Okay.
It's not a theft. He voluntarily entered into some kind of agreement with her to allow her to sublet the vehicle.
Right.
And that is not a criminal situation. That is civil. That's why collection attorney deals with unusual situations, very aware of what things they can do under the law, what latitude they have to potentially seize that vehicle back, if there is a way to do so.